Well, trading conditions in general have been challenging during the third quarter in the retail space. There were some mixed fortunes within that sector specifically. Derek Engelbrecht joins us now to unpack the retail sales numbers according to the latest report out of Ernst Young. Thanks so much, Derek, for joining us this afternoon. I mean, the retail sector, the retailers, we were chatting a little earlier about this to Chris. Growth in earnings, they're still managing to rake in, has prompted investors to really delve into these stocks in particular. I mean, it's confounding at times. We talk about this bubble that's going to burst at some point. For someone in tune with the trends and operations, the overall operational environment, to what extent does this confound you? Because your latest retail survey revealing that trading conditions in general have remained challenging.
I think you're absolutely right. There seems to be a different kind of logic that one needs to use to reconcile these two stories. It's almost when one looks at the share valuations, it's almost a forward-looking view based on relative risk versus relative opportunity. And I do agree with Chris. I think they are well priced, considering the run-up in the share prices over the last year. And then when one looks at the survey results, you effectively asking somebody to look in the rear-view mirror, albeit briefly, and that's where the logic unfortunately breaks down. Is how does the market have such a different view from the operators in the industry? But there are, of course, some companies and some parts of the economy that are doing relatively well compared to others.
When we drill down into that specifically, the fact that we are looking at mixed fortunes within that sector, that in itself surprises me. I mean, the fact that you've got growth in non-durable goods, retail sales volumes being depressed relative to that of durable goods.
The durables, of course, if you will recall, over the last 18 months has been under some tremendous pressure. They have not seen the volume growth that, for example, have featured consistently when one looks at the semi-durable sector. And unfortunately, one has to keep in mind these relative terms, the base against which you compare it. So even the durables, which measured a 10% year-on-year increase in sales, is reflective of effectively a 2% year-on-year decrease in prices. So it just shows one how different strategies plays to different roles.
But surely, even where you've got that price mechanism that's enticing consumers into the durable segments, you've got to take into consideration that necessities are necessities, and surely that should outweigh, you know, the need for durable goods when you're struggling to get a handle on filling your daily shopping basket, for example.
Absolutely. I do think that there's a prominent role being played by expansionary credit growth, which one would, under normal circumstances, associate far more readily with the buying of durable goods. So in other words, the cost of buying durable goods, furniture and appliances, relative to the increase in technology, really you're buying something today at almost last year's prices, but getting the kind of performance of 5 years down the line. And that's a relative trade-off. I do agree with you that the non-durables, people have to eat, that they have to consume on a daily basis. But I think people are doing that because it can't be funded by expansionary credit growth, maybe to the same extent, in a very discerning manner.
To what extent then are we looking at risk within that durable space, given the fact that there have been alarm bells ringing around unsecured lending, and that based on the fact that it's just grown too fast, it's not sustainable in the long term?
Most of those retailers would have learned some lessons as recent as 4 or 5 years ago, just before the introduction of legislation, and generally speaking, some far more buoyant and confident times. There's no doubt that there will some steam disappear from this particular process if the only way that you can increase your top line is by funding it in some form of credit mechanism. There's only so much assets to be collateralized as part of a debt expansion or a credit growth strategy, and one needs to make sure that you're not the last person in line when that happens.
Where, of course, volume sales have, stood in favor of your durable goods. I mean, the overall profitability of those players has to have been hampered with the price reductions that you've been talking about, and them being forced to keep prices low. Let's talk about how that's translated for the semi-durable durables and the non-durable goods segment?
So firstly, dealing with the semi-durables, footwear, clothing, apparel, this segment of the market have been able to absorb some of the historical price increases and have also been able to stimulate continuing growth in volumes by effectively being far more successful at passing those costs on to the consumer. But in general terms, it's still below inflationary increases. So the impact of promotions, sales, but effectively selling into confidence and selling into a demand for the product has helped them to maintain their level of profitability far more successfully than some of the retailers in some of the other segments that you referred to.
And of course, that just making the job tougher, because you've got these retailers having to contend with, like everybody else, rising input costs, and that's a big factor to take into consideration here, their ability to push price increases through down the line.
There's no doubt. So the non-durable sector is certainly struggling with two things which I think impact on a daily basis. The first one is the relative volatility, but unfortunately one-way street of fuel price increases since the beginning of the year. So call that energy costs. And the second, of course, is really just dealing with the fact that we're not creating the amount of jobs in a domestic growth environment, which is in tune with the global environment that we would like to see to create the confidence levels in that segment.
What's your outlook moving forward, and just how much power these retailers are going to have moving down the line, enticing consumers their way? Because of course we've also got to take into consideration a competitive environment.
When one looks at the results achieved by some of the retailers, those retailers that have a growth strategy which is aimed at the emerging consumer, coupled with the emerging consumer outside of a South African conventional market, certainly seem to be the companies that have it more right in the current moment than some of the others. Growth is hard to come by. At the end of the day, you have to be far more innovative than your competitor. But if you have a value proposition for the emerging consumer and the emerging consumer outside of your traditional markets, those companies certainly have seen their results being far more positively impacted than otherwise.
We talk about a competitive landscape, and when Walmart came in with Massmart, we talked about this, really shifting that competitive landscape moving forward. I was speaking to a trader the other day, and he highlighted and said, for him, the competitive landscape surely isn't competitive enough if you've still got these retailers managing to produce the kind of earnings that we've gotten used to over the last earnings season.
The retailer environment in South Africa is competitive, but it is focused. In other words, you have 4 or 5 really big players that dominate the market. I do believe that over time we'll see some of the practices that Walmart certainly will introduce through its Massmart business in South Africa and in Africa, which will certainly disrupt the way in which some of the conventional players have been thinking about how to do business, quite frankly. They've obviously done it from a timing perspective. They've been selling into weaker demand, weak confidence levels, but there's no doubt that over time some of that thinking will change the way in which some of the established players are looking for the ideal consumer.
Well, let's leave